Hello there, guys. Welcome. It's Saturday, February 19th. My name is Dave Coker, and this is Talking About Finance. And you know the routine by now. It's 7 slides for 7 days, although sometimes we got so much to talk about, we go to 8, 9, even 10 once. Lots going on in the markets, as always. Let's start out by looking at the S&P 500 over the prior week. And we can see it's a mixed bag, but there's an awful lot of red there. And that's a little disturbing. We had such a good run in 2021, and 2022 is off to a really, really weak start. Why? Well, the past week, geopolitics is all the rage. Market volatility up, share prices down, flight to safe haven assets is underway. The S&P 500 finished down about 1.58% on the week, while the VIX traded flat at 27.75. We're still close to one standard deviation, which is 27.50. Again, we're not seeing a real buying up yet, so watch for a sharp drop in cash prices, sharp drop in SPX, and a big 2+ standard deviation move in the VIX, and that'll be a strong buy signal. And then if you've got cash, you can go ahead. So in this market, what we're seeing right now is we're seeing actually the 10-year traded to close the week at 1.93, so a little bit up, not that much. Oil at 90.37, down a little on the week, but still up 20.2% on the year. Now, this market is interesting because markets typically look past geopolitical tensions. There'll be a couple days of volatility, and that'll be it. This time might be different. And it gets down to Russia's key role in oil production. So we got to pay attention to it. We can't discount that. Retail sales for January, well ahead of expectations. That's a plus. That's actually pretty good. But so was PPI. Came in hot at 9.7%, far above the long run average, as well as above the forecasts that were roughly 9.1%. Now, in this market, value and cyclical stocks look like the best bet, as well as commodities. And we're going to talk further about that later. There's been a lot of underinvestment in that sector, which should give rise to peak performance going forward. So you want to be able to make investments. And how about stocks? Here's something particularly interesting. And again, not my research. You know what my research style is like. I do like to bring lots of stuff that we talked about on the Telegram channel. And here's an interesting presentation. We've got the annual returns for the S&P 500, and we're looking at it from 1926 to 2020, fairly large sample. And you can see here, guys, SPX is down this year about 9% so far. And you can see typically when that happens, the U.S. is in a recession, or as this gentleman points out, a world war. Oh my gosh, we got to be very, very careful about wishing for that. I'm certainly not, but yeah, Mr. Biden, he's very, very reckless with his language and his speak. And I hope it doesn't get out of control. But you can see there's something odd going on in this market. We can also take a look at, world stocks, or the rest of the world, compared to the United States. And what we're doing here is we're looking at prices, and we're trying to get an idea overall about how the U.S. is trading compared to the rest of the world without the U.S. And right now, guys, stocks globally are looking pretty expensive. U.S. stocks, we're about 5 standard deviations above. And you can see, even going back to the global financial crisis, less than 3 standard deviations. The dot-com bubble, right there, less than 3 standard deviations. We're really, really, really expensive. And this has got a lot of people thinking about what are they going to be doing with their money? Where are they going to be putting it? And when you start to look at different indexes, gosh, the NASDAQ, now the TA guys, and there's a couple gals on the Telegram channel that look at this stuff. My gosh, they're really cautious about this. A double bottom, we're not going to see it lift off. Their view is we're going to see it drop in a sharp way. We'll have to see. We're already punched through the 200-day moving average, and it's not really a bullish chart from a TA point of view. So you got to pay attention to that. And another factor, look at personal savings off Crescat Research. Gosh, look at this. A total burnout, total wipeout of personal savings. People are spending money because inflation is really huge. Paychecks aren't stretching to keep up. They got to dip into savings. Where's the money going to come from to keep the stock market afloat? It's a reasonable question. I'm a little dubious about this, and you guys know my whole routine. In March of 2019, I moved a significant portion of my retirement assets into gold and silver. And just last week, now my portfolio, my investment portfolios, whether we're talking about the IRA, tax-free, or we're talking about the taxable side, what I call the 300 account, regardless, they generate significant cash flow. So I've got a welcome problem periodically. What are you going to do with the money? And it turns out here that I had a fair amount of capital, and I actually didn't know what to do with it. So I flushed it. I pushed it all into gold and silver. 50-50, basically. So I'm up to 71% of my retirement capital now is invested in gold and silver, zero in cash. For me, that's very, very unusual. I typically do try to keep some money around, some liquidity around. In particular, when the market's looking a little overpriced or things are looking a little odd, I tend to build up cash so I can swoop in post crash. But in the retirement account, at least, I still have cash in the 300 account, the taxable account. But in the retirement account, it's flat. It totally is, except for the stocks that generate cash flow. And then periodically I can do stuff with that. And historically, I've been buying additional generating cash flow generating stocks. But this quarter, what I did was I took that wad of cash and I added significantly to my gold and silver positions. Now, some people say, why are you going into gold? It's, to quote Keynes, it's a barbarous relic. It's got a negative yield, for gosh sakes. You have to pay for storage. You have to pay for insurance. So the question is, why would you invest in anything else when times are really, really weird? Inflation is booming. And I think there's an argument to be made for actually putting capital into gold and holding on to it. And recall, I've told you before, when I last did this in 2004, 2005, 2004 was gold, 2005 was silver. By 2014, I had sold, I had liquidated 100% of those positions, and they were very large. And I bought 4 houses, paid cash. I'm going to do it again off this trade. I'm convinced that there's some upside there. I'm not the only one. Here's something that actually helps clarify your thinking as well. And this is what a research note, and I did quote this last year, a research note from Goldman Sachs called Revenge of the Old Economy. And since 2012, 2016, basically, we've seen a huge wave of capital being invested into tech stocks, CAPEX, driving into tech stocks. Underinvestment, overinvestment in tech, underinvestment in the old economy. Commodity producers. So whether we're talking about gold and silver, which, as you guys know, I really like, or you're talking about agricultural commodities, it doesn't matter. There's been rampant underinvestment. And now as demand increases, they're struggling to keep up. And there is some research I've read. I can't cite it because it's pay-for research from a bank that I do consulting work for, but there's some interesting research that suggests this situation's not going to correct for maybe 5 years, at least 3 to 5 years, they're saying. So once again, I think it's a good time to buy gold. And guys, typically when in these presentations, I do spend a fair amount of time talking about crypto. Hey, I didn't tonight. Are you happy? Well, guess what? I saved the best for last. Check this out. We know that Plan B has the stock to flow model. It's based upon commodity prices and things along those lines. Now, this guy called Wicked Smart Bitcoin, you've got his Twitter handle up there, W_S_Bitcoin. He did the stock to FOMO model. And it's really interesting. Of course, he backfitted it and it's fairly accurate. I don't know what the R-squared is, the goodness of fit. He didn't post that, and I don't really care. It's particularly interesting, though, because when you start to look at the predictions, in particular, when you start to look at the predictions as the next halving cycle comes up, which is in 2024, by the way, May of 2024, when the next halving cycle hits, he's got us at roughly 100,000. That aligns with what JP Morgan and some other banks are mentioning. And furthermore, it backfits and it backtests really well into what we're seeing now. Prices, a little bit north, approaching 100 as they were before, 60,000 in this cycle. And we'll have to see how it all shakes out. But regardless, guys, you know what I do. Every Friday, I buy Bitcoin. I've been doing it for years. And it doesn't mean you have to spend a lot of money. You don't have to buy one Bitcoin every Friday. Who in God's name could do that, right? But, keep in mind a Bitcoin is divided into 100 million Satoshis. And yes, I buy the same amount of Bitcoin in terms of money every Friday. I used to do it at night, around 11 o'clock, 12 o'clock, maybe even Saturday morning. Now I typically do it Friday morning around 4 to 5 a.m. when I first get up and having some coffee. It's automatic, and you might want to think about it as well. It's not an investment, but Bitcoin is a speculative play that, at least for me, having been buying it for many years, I've got significant profits already in the can, and I'm not selling any because I think I'm pretty confident, ignoring this model, the price of Bitcoin is going to go up in the future. So once again, if you got any questions, DM me. And have a great week, guys. It should be a really, really good week. New York is going to be closed on Monday. It's President's Day, I believe. I have been living here for 25 years. I can't recall. I know New York is closed. We'll see what happens when Tuesday comes around. And once again, hopefully things will calm down over there with Ukraine and Russia, and especially the warmongering United States. Have a great week, guys. See ya.